Welcome everyone, and thank you all for joining this week's Next Normal series from Worth Live on the year of impact and how philanthropy and ESG are changing. Firstly, I hope you and your loved ones are keeping well during what has and continues to be a challenging time for so many people. I'm Juliet Scott-Croxford, CEO at Worth Media, and I'm delighted to be joined by a wonderful group of special guests today. Bruder, founder and chair for Education for Employment, Vadim Avdeychik of Counsel, Corporate Development at Hastings, and Kathleen Entwistle, Managing Director and Private Wealth Advisor at Morgan Stanley Private Wealth Management. Joining us today is also Jim McCann, our Chairman at Worth, who is very passionate about today's subject. Jim is also the founder of 1-800-Flowers, and this topic has been an area of interest to Jim for a long time, as well as the speakers that we have today. So welcome everyone.
Thank you.
Delighted to be here. Thank you.
Thank you.
Thank you. Many of you know by now our intention at Worth is to create conversations that help inspire and inform our community, many of whom are investors, entrepreneurs, and business leaders who want to leave a positive impact on the world and help to create a more inclusive and equal economy and society for the benefit of everyone. And we call that Worth Beyond Wealth. So we hope you enjoy this session and we hope you find it valuable. Forward thinking is really the essence of this series, The Next Normal, where Worth is looking ahead to what the world looks like in this new environment that we're now all living in. The growth of philanthropy in recent years has been substantial, and when it comes to investing, ESG has become a big trend. So we're delighted to have experts and leaders, Bruder, Vadim Avdeychik, Kathleen Entwistle, and Jim McCann with us today to share their perspectives on the growth of philanthropy and ESG and how we can expect impact to transcend into 2021. So a few housekeeping rules before we get started. This is a conversation and we welcome comments and questions from you in the live chat function. So please do use that symbol at the bottom of your screen and type in any comments or questions you have for your speaker, and we will weave it into the conversation as we go. And you are all on mute, but if you do have a question, we will unmute you, or if you prefer to stay anonymous, that's totally fine, and I can ask the question directly to the speakers. So let's get started. The year of impact and how philanthropy and ESG are changing. Firstly, I'd love to hear from you all briefly about your background and how you became involved in this field of philanthropy and ESG, and also how you're doing personally. Ron, let's start with you.
Sure. Hi, I'm Ron Bruder. I was a serial entrepreneur for most of my life. 9/11 happened, and I radically changed my focus. My eldest daughter was down by the World Trade Center when it went down, and we didn't know what was going on until late that night. And afterwards, we started looking at why it happened, what could be done to prevent it from happening again. And I put together a group of fairly smart people, advisors, to help me figure this out. People like Lee Hamilton, Mukhtar Lamani, Maureen Qureshi, Ellen Leibson. We spent about 1.5 years figuring out why there was all this unrest and how these radical groups could survive and what was feeding them. And we came to the conclusion that the Middle East has the highest rate of unemployment in the world. And if these youth could not find jobs and meaning, they would be prey to radical groups wanting to do socially harmful things. And we also came to the conclusion, which was not mine initially, by the way, that we would build local foundations within the countries, and these would be autonomous, semi-autonomous. They'd have a local board, they'd have a local chairman, they'd have local staff, and they would rely on the US for guidance and some of the funding. But basically, they would work with the employers to see where the jobs were needed and help, with our help, build curriculum to do that. This has been my full-time job for 18 years. We've gone from 1,000 placements the first year to we've trained 118,000 students to date. We've trained in entrepreneurship. We used to do a lot of hospitality training. That has not been one of our biggies at the moment, but we hopefully will come back. We do a lot of IT work, a lot of engineering. We have programs for people that couldn't get out of high school, and we teach them automotive repair and plumbing and trades for which there is a need. The goal is that in the next 5 or 10 years, we will basically get to the point where the countries we're operating in will no longer need our help because they will have figured out how to train for jobs.
Thanks, Ron. And did you say you went from 1,000 to 118,000?
Yes, correct.
Phenomenal. And we'll hear a little bit more about that growth shortly. Vadim, as an attorney, welcome. I'd love to hear from you just a bit about your background in the area of ESG and also how you're doing personally over this last 8 challenging months.
Sure. Thank you for that, Juliet. Doing, I think, as best as we all can. I think, the family's healthy. Actually been probably busier than I was prior to the beginning of COVID, which is weird. And at the same time, you feel like, am I at home? Am I at work? Am I constantly in the same place? But, doing our best like everyone else out there. In terms of ESG, is not something that I started out practicing. A client came to me about 3 or 4 years ago and said, look, and the client was an asset management client, and they said, look, we're continuing and we're starting to build more products focused on ESG. There's not a lot of lawyers that know a lot about it. If you can figure it out for us, then I think you'll be a good resource for us to go forward. I said, I've never heard about it, but I can learn it, and let's see where that goes. And little by little, I saw the ESG kind of momentum gain more speed. And it's not just ESG; it's sustainable investing, it's impact investing. And I think the good thing about it for me, I get a little bit of validation, because you're not just working on a new product, financial product for a client, but you're working on a product that has the potential to do good. And that's something that's very rewarding, being in an industry that you typically do not get this type of reward.
And Vadim, you made a good point there, which is if we just step back and think about philanthropy, ESG, impact investing, how would you distinguish between those different things?
Yeah, I mean, I think from philanthropy, impact, and ESG, I would say ESG sometimes can be the hardest to measure the impact, right? If you're pursuing an impact strategy as an investor who is seeking that strategy, I want to hear from that manager, how exactly my investment going to lead to impact. From a philanthropy standpoint, it may be even easier, right? I come in, here's some money that I will donate. How will that be used in terms of realizing the goals of that? From an ESG perspective, you're really investing into companies that, say that they will do certain things. Now, one of the hardest things that have come about ESG is that really happening? Is there sort of measurable impact on the 3 areas that ESG investing pursues? So I guess, the easiest way to say it, impact is something that you can see, more or less immediately or within a certain time horizon, whereas ESG sometimes can be harder to measure.
Thank you. And we'll get we'll go into that in a bit more detail further into this discussion. Kathy, I want to say hi to you. Both as someone that's actively in philanthropy, but also advises clients in this space. Share, if you will, how are you? And share, if you will, a bit about your background as a financial advisor.
Sure. Hi, Juliet. Thank you. First of all, I'm doing well. Everybody's healthy, and that I think is the most important thing. I think we all had another wake-up call with COVID in terms of rethinking what our priorities are and resetting our priorities. So I think from that standpoint, it's a positive to take whatever we can out of a negative. Growing up, I've always volunteered. I've always given time, to different causes. I've been on a lot of boards, and I've always gotten a lot of personal reward. It's like when they say you think you're helping somebody else, but when you do that, it actually comes back and gives more to you than you're actually giving to somebody else. And I find that time and time again. So giving back is really important to me. And that really ties in to philanthropy and also ESG investing and impact investing. It's all about giving back. So I feel very aligned with that philosophy and concept, and also really enjoy helping our clients understand and implement a plan for giving back the same way that it's important to them and align their goals and their values with those causes or investments that are meaningful to them.
And Jim, I want to say hi to you. This is an area of great interest to you, I think, both creating impact, but also philanthropy. I know you're active in this space. What does it mean to you, philanthropy?
Well, I think that's changing, and I'll turn around your question to me, and I'll ask it to some of our folks who are gathered with us today, Juliet. A question I'd have for you, though, first. You know, we were chatting with Vadim, and Vadim migrated here from the Ukraine. I don't imagine there's a lot of internal philanthropy as part of the culture in the former Soviet Republic states. My question to you would be, as someone who migrated here from the United Kingdom, do you notice a difference in terms of the role of philanthropy here in North America versus the UK and the rest of Europe?
I do, and it's a good question. I think I was struck when I first came here how inbuilt it is in the DNA of what America is about, and how I think it's interesting when you're bringing children into the world. It's something that you instill in them from a very early age. And I think, you know, you talk about saving, spending, and giving here in a very, all of those things apply. And I think it's inbuilt in the way American culture, American society think. I think it's inbuilt in things like, you know, you're going into giving season now. And that is different. It's not as inbuilt in the UK. I don't think it's as inbuilt in Europe either. I'm sure there are some attendees on this webinar that are from locations outside of the US. But I was struck, and certainly I was working at the Guardian media group, and a big part of the strategy in diversifying the revenue at the Guardian was about driving donations for independent journalism. And the growth of giving to the Guardian in the US was substantially more than in the rest of the world. And I think that the whole company was struck by that, because it was such a sort of cultural, a normal way of thinking, I think, here.
Well, that begs a question then of Ron, which is, Ron, if you're trying to bring your philanthropic efforts to help other parts of the world, for example, I know you're very active in the Middle East, where you have a concern about the high percentage of youth unemployment and the ramifications that could cause. So there, I don't know what the role of the attitude toward philanthropy is there, but you're bringing a philanthropic bent from North America to be active in providing services there. How do you bridge those worlds?
Much more easily than we did 15 years ago. There was not a philosophy in the Middle East of philanthropy, of giving. It just was not in their culture.
So give us a little bit about what it is you're doing there in the Middle East.
Sure. We have formed standalone foundations in the Middle East in 9 countries: Egypt, Jordan, Morocco, Yemen, Gaza, West Bank, Tunisia, etc. And those countries create curriculum to train youth in the country, in that particular country, for jobs. They work with local employers. We have relationships with over 3,000 employers to date. And we go to their offices and we say, okay, well, this is done by the local affiliate. They don't see a Ron Bruder, they don't see an American. They see a local chairman, a local board, local staff. And with the local community, we work with them figuring out what jobs you needed, and we do specific trainings. We build a curriculum for that particular need. And the goal is to employ 70–80% of our employees, of our graduates. We also train youth in entrepreneurship. We train youth in air conditioning repair. Depends on the level of youth that we're dealing with, but we cover the gamut in the country, seeing where there's an opportunity. We also focus on women employment. We think if going to be a change agent in those societies, it's critical that the women are able to occupy a place in society. Unemployment for women since COVID has tripled in the Middle East. The impact on women has been much stronger than on men.
It's amazing.
They're much more vulnerable, but yet we're continuing. I think the last look I saw, we had 57% of our graduates being women. And so that has been an extremely strong focus.
And Ron, can you share a bit about like the importance of partnerships in your foundation and in your work, and how important are partnerships on the ground in the different countries that you operate in to make this a success?
Sure, the very nature of what we do in each country is a partnership. It's a partnership between the local affiliate, the other affiliates, the US, an office in Madrid, and together as partners and collaborators, we will work to train as many youth as we can and get them placed. We also have partners with employers. We work with employers to figure out what their needs are, and by establishing what the needs are, we'll create training programs to help them get a more productive workforce. We also work with our organizations that build curriculum. We are their partner. We go at it and in collaboration, we will build curriculums together to satisfy the needs of the local labor force.
And a question for all of you really, that is how the past year has impacted the growth in philanthropy, and there's an obvious need for it, and the events that we've seen that have driven the racial justice movement and the pandemic have heightened that. I think we can see there's an expected rise in giving both this year and next year. How closely related is that to the pandemic and the social unrest that we've been experiencing? Kathy, do you want to start?
Sure. I think there's a direct correlation, a direct relation towards that, because with what happened with COVID, what happened with, social civil unrest, everything that's been going on has been changing the landscape dramatically, and it's like a call to action in a sense. So a very small example, there's 100 women in Bergen County, New Jersey that formed Women United in Philanthropy, and we each throw in $1,000 a year, and we vote on one charity to get that every year. And it's usually geared towards women. So there might be, women who are senior citizens, and they go to like a certain home or office, and they are doing work to keep, different types of work that keep them busy and educated and feeling empowered. Well, a lot of these organizations that we've supported in the past have fallen behind with COVID, and they needed more support. So the organization made an executive decision to just give the funds back in March and April when it was most needed, and not wait till October, till the annual meeting to take votes. So I think that's a very small example of what's happening more broadly and globally, where these organizations that have funding are realizing we need to take those funds now and deploy them now. There's no time to wait for whatever that might be. And I've got colleagues and friends who've reached out to me, clients, to create foundations and donor advised funds and things like that, where they have an opportunity to be able to give funds away immediately where needed for specific causes that they don't even know what might be coming up based on Black Lives Matter and things that have happened, just in the last 6 months with killings of people that just don't make sense. So I would say that's one piece of it. And the other piece is the whole ESG impact investing has evolved over the last 10 or 15 years. And, it's been changing quite a bit. And basically what's happening is people are becoming more and more interested in it. And as they become more and more interested, there's more products and different types of investing that are being developed. And we're trying to develop more ways to measure impact. Morgan Stanley has come out with a new, benchmark or way of measuring it as well. But I think it's important to realize that there's so much change going on right now, and you have to accelerate that change when the need is greatest.
Kathy, let me follow up on that point with you and with Vadim. And it would be my impression, uninformed impression, but an impression that in your world, when people say ESG investing, Vadim or Kathy, I think in years gone by, people would have expected that you'd have to compromise your expectations for return on that investment. Is that
Right.
still the case?
I'll do a quick jump in, and then Vadim can jump in right after. I apologize, but it's not the case, and that's what's really interesting. Now that you're not giving up returns, there's no data to prove that you're giving up returns. In fact, the data is showing that you are able potentially to perform even better, and that's because of a number of items. But one thing as well is just the pure interest in that area. It's where the energy and the money and the new investments, the new money is going, and that tends to increase it there. And then also the way that companies are selected and the types of behaviors those companies are adopting are more efficient for going forward as well.
Yeah, and I think I would add to that point is that, ESG coming out of the financial crisis of 08, of 09, didn't have the historical track record to draw in the investors. And when investors look for new products, they look for that 5-10-year track record. And as we're seeing now, these products are developing that track record. And at least during the pandemic, the funds seem to be outperforming comparable funds, right? I think what's going to happen as you see asset managers look at ESG to me will almost become part of your fundamental analysis as you would look at a financial statement at a company, right? I don't think we can any longer turn the blind eye and just disregard those factors as they influence a company's profitability. However, from a lawyer standpoint and someone who deals with regulators quite often, at least right now, we are seeing some pushback from US regulators saying, hey, slow down. Don't just look at an ESG fund and automatically jump in and say, this is a good investment. You still need to look at the investment as at a fundamental economic level before you look at from an ESG standpoint. Now, like with any hot trend, I think sometimes you have opportunists who jump into an area in order to take advantage of a trend. Obviously, regulators are there to ensure that retail investors and pension and participants do not get harmed. And that's why I think they're trying to pump the brakes to an extent. But overall, I think, as I noted, this train has left the station and it's only going to continue. And as the time shows, I think ESG will become more of your routine fundamental investment strategy.
And Vadim, are you seeing, to what extent have you seen the clients and companies that you serve integrate ESG into sort of a fundamental way of measuring the company? So beyond the financial statement and the bottom line, are you seeing, because I think in the past, a lot of the complaints around ESG are we can't measure it. And often it's a separate board sitting outside of the core board governance. How much of that are you seeing shift, and has 2020 helped accelerate that in any way?
Yeah, I mean, look, you're definitely seeing a shift. 2020 is accelerating it, definitely. I think there's still some challenges because in the United States, companies are not mandated at least to report on their ESG metrics, right? Some companies do voluntarily report that, but then sometimes there's an inconsistency in terms of what metrics are being used to report. So if I'm an asset manager or let's say a private equity fund who's looking to set up a fund that will be geared toward ESG or impact, a lot of times it takes a lot of infrastructure development internally at the asset manager to ensure that they are investing is how they are marketing themselves to the investors, right? So they go beyond what the company is showing on their financials or on their ESG reporting, and they're doing their own analysis, their own homework. But there is a challenge because that really varies by manager because there isn't a uniform structure in the market right now. We're seeing something different happening over in Europe and in UK. There's a push for a sort of a uniform standard that everyone adheres to and everyone measures. So then when I'm a retail investor and I'm looking at a fund, and I can compare it very easily between Fund X and Fund Y. Here, we're not there yet. I don't know if we'll ever get there. Maybe there is some benefit to having flexibility in regulation, but over the last 2 years, you definitely are seeing a lot more managers focus on that. And that's primarily driven because large pension plans are coming to them and asking for these strategies. They want to be able to report back to their participants at how their money is doing good in their environment.
And I think if you can demonstrate that the valuation of a company is that much higher because you have led with purpose and integrated in, I think that is when you'll see mindset shift within the investor community.
That's the waterfall event.
Absolutely. And I think that goes back to something I alluded earlier. As these managers are able to show a longer track record, I think that will sort of be a self-fulfilling prophecy that yes, this works.
And when we talk about philanthropy, Vadim, Ron, Kathy, well, Kathy, let me start with you. You work with so many families. You help them with so many aspects of their life, wealth being the kernel of where you start. But when we say philanthropy, are we perhaps cutting off the conversation because does philanthropy only apply to the super wealthy? Or how do you work with mostly wealthy families, obviously, but you also work with up and coming entrepreneurs. And how are you seeing trends in terms of how they think about giving, involvement, and then maybe the wrap is appropriate to call it philanthropy?
I mean, there's many different ways to give, right? So we talked about that a little bit too. We're seeing, first of all, we're seeing people giving their time in places that are important or meaningful to them. So there's the ability to make an impact by bringing them into your corporation and giving your time. There's then there's also, you can make outright donations and things like that, but we're also advising if you have appreciated stock, if you're an entrepreneur and you're starting a company and there's, private equity in your company, you can also donate a portion of that as well. There's lots of different ways to make that.
Let me take you back to that stock question. Are you able through your facilities at Morgan Stanley, if there's a charity out there and someone says, I have stock I've held for a long time, I'd like to give them $10,000 of that stock, but that charity isn't set up to receive stock. Are you able to help facilitate that?
Yeah, so there's different ways that we'll do it. So one is if a client wants to set up something as simple as a donor advised fund, it's a very inexpensive vehicle to set up with not a lot of organization structured around it. There's a lot of it is taken away from the donor, and they can just donate money there, get the tax write-off. It's an immediate write-off, and then the money can grow inside the donor advised fund, and then be gifted to different charities immediately or over time, and you can continue to invest it inside the donor advised fund. The key is you're getting the donation or the deduction for the donation when you give it to the donor advised fund. And then from the donor advised fund, you can give it to the different charities. So if they don't have a vehicle set up,
yep,
that's one way to do it. And you can do that with a very small amount of money, $5,000, $25,000.
Oh, really?
So it's very doable.
So philanthropy doesn't just mean the super wealthy.
No, it doesn't. And also, look, if you bought Apple and doubled your money and you said, I want to give, some of this to the charity, there are a lot of charities that will take appreciated stock, and they do have it set up. And we are constantly sending shares of clients' holdings to their, favorite charities or, schools and things like that. So lots of different areas. So you can do that as well. And of course, there's foundations, and Ron can speak to that, even more than me, obviously. But there's a lot more complexity involved with running a foundation than having a donor advised fund.
But short of the foundation, Ron, I'm intrigued by the purpose of your activities. My first career was as a social worker. I worked in the social services. I ran a home for teenage boys. And Ron, I know what you're talking about in terms of the impact it could have. I know the impact it had on me. I wasn't someone who was smart enough to apply myself in school. So my learning came from working early, part-time jobs, full-time jobs, the things you learned working it's hard to measure and it's hard to quantify. The fact that the boss can yell at you and you have to do what you're told.
Real world.
And oh, wait a minute, you can earn a living by selling this particular part to hardware stores, and you dress nice, you seem to have a nice, all of those things that you learn.
Sure.
Plus, I know when I ran a group home, I had 10 teenage boys. My job was to make sure I got a part-time summer job for each of those 10 boys. It was very selfish, because if I did, they had a couple of bucks in their pocket and they were tired at night and they weren't getting into trouble. Apply that on a macro scale to what you're doing. How important is it, not only the earnings, but the time and the learning?
Well, it's key for these youth to be able to have meaningful jobs. In the part of the world that we operate, if you do not have a job, you stay at home, you don't have a relationship with the opposite sex, you have no pride. It's in a very much different situation. There's no source of subsidy for these people. So it's a very difficult, shameful life. And if somebody knocks on the door offering them to go to some region and to do some deed for some questionable cause, they're there because they want the money and they want to be doing something with their lives and they want to get out of their house. And so we see time and time
It's
again.
a lot more than a paycheck.
Oh yes, it's a way of life. I remember one graduate that we had in Gaza, and he wound up going into the Gulf. He wound up going into the desert. And so where he went and how he was traveling was extremely dangerous, but he really didn't care because he wanted to get to the Gulf. And he felt if he died in the process, it didn't really matter because he wasn't really living. And you have an attitude that life is worth very little without a job. The job is key to evaluating, to appreciating your life and enjoying your life and wanting to do socially beneficial things rather than go off on some cause that may or may not be in sync with what you really believe in. It gives you something to do and gives you pride, gives you resources, gives you relationships, gives you a cause, gets you
Gives
out
you
of your
purpose.
Yeah, exactly.
Yeah.
Ron, I'm interested in a lot of the Worth community who have set up foundations talk about the proximity to the issue you're trying to solve or where you're trying to kind of leave an impact. And I'm struck by the foundation that you set up, because a lot of people focus very locally in their localized area, and you went way out of that. So I'm interested in, is that something you had to, was it the 9/11 moment that sort of reset you and made you think it has to be about this part of the globe, or was there any other factors that led to that? And how has sort of the proximity piece either sort of helped or been a challenge along the way of building the foundation?
And let me pile
Very
on.
good question. Why not?
Ron, let me pile on
Go for
Juliet's
it.
question. Did you also have to lobby and try and change laws so that you can, in fact, get these people to work?
No. By and
Good.
large, there was very little of that occurring. We've had a lobby in the beginning to get credibility that we were real. When we first started on the ground, people didn't believe who we were, what we were. We had our first program in Gaza. Nobody signed up. It seemed too good to be true. And our partner on that was a guy by the name of Sama Khoury. Sama runs the largest construction company in the Middle East called CCC. And you'd think with him sponsoring it, people would believe it, but they didn't. But as soon as we had our first graduates out of our school and into the workplace, suddenly the situation changed. In terms of aha moment, yes, 9/11 did change my thinking. I was focused on American foundations. I was involved with Amnesty International. I was involved in the White House for blind people. All my thinking and focus was domestic. But when 9/11 happened, I also looked back. I had spent time in Belfast, Ireland in the late 1990s. And when I was reading, this was through a pharmaceutical company that I started. And when I first arrived, everybody in Ireland wanted to know who I was dealing with. I was dealing with one religious group. I could not deal with the other. And it was very, very clear, very stark. And there was pending violence. I was threatened many times that if I wanted, or I was deemed maybe playing with the other side, I would be dead. And within 2 or 3 years, that really changed. And I went back to specifically to understand why these people were so focused on killing each other, now literally working together to make a killing. And that made it very clear to me that economic opportunity equates peaceful societies. And my goal was to prevent another 9/11 from happening or similar acts. and it became very clear that if these youth could find jobs and have meaningful work, they wouldn't be interested in doing these kind of things. They'd be building families, going on vacations, doing worthwhile things with their lives because they now have pride and they now have a future.
I wonder, it begs this question, I wonder if in this country that you magically had the ability to put 5 million unemployed teenage or young 20s youth to work, what kind of an impact that would have on society?
It would be huge. It would be phenomenal. And I picked an area of the world where I'm focused, where we're effective. I think what we're doing could be very useful in the United States. If anybody wants to do it, I'd be happy to help them. But I spent too many years building an infrastructure that's Middle East focused on an area that really needs us. And my goal right now for the next decade or so is just to expand that.
Makes sense.
I have a couple of questions. I'm just reading the comments as well. There was a comment from Justin. Thank you, Justin. That Gallup has done some research that showed that people often recover faster from the loss of a loved one than from long-term unemployment, which plays to that the impact of giving or finding employment for young people. There's a question here, when it comes to ESG investing, why do you think this year we've seen such a rise in this? And how do you think our thoughts around giving will change as we move forward? Vadim, do you want to take that one first? I think specifically on ESG, why have we seen such a rise this year? I know we touched on, obviously, COVID.
Sure. I don't think it's one thing in particular. I think it's a combination of a few things, right? I think it's a combination of ESG funds establishing a track record and finally sort of luring investors and showing investors that ESG is real and you can actually outperform funds that do not focus on those strategies. I also think there's been a push from the investor side to really understand how your money is working for you, but more importantly, what your money is doing for you, right? And they talk about millennials, but I don't think it's just millennials. I think people really want to see that their money is going to the right causes and is actually doing good. And I think the funds that can show that, then they're having a good ability to generate those assets. And with COVID, as I think Kathleen noted before, I think people kind of took a step back and said, look, we need to do more. We can't just be kind of focused on what's going on around us, but we have to think about what's happening in the world in large. And the social injustice movement, that kind of only adds that fuel to the fire. So, as product developers, they're seeing all of that and they're trying to react. And, I think maybe 2020 has been a phenomenally great year for ESG. Can we sustain that? We'll see.
Juliet, I can add to that too a little bit, if that's okay. Add on to the whole conversation, and that is that we found that the people that invest using an ESG concept, we see it narrow but deep. So we think that there is a great opportunity for more people to invest in ESG investing and to widen it and go deep as well. So for example, if somebody was investing in ESG, maybe 80% of their portfolio was in ESG. And then other people had hardly anything. We also find that millennials are very interested in their environment in the world and making an impact, and they don't seem to be as quiet about it as maybe other people were in the past. So they are very vocal about it and they do want to make that impact, and they're looking at ESG as an opportunity to do that. We also found that wealthy clients and are also looking to make that impact, and they would rather put their money somewhere that has a double effect, so they can do well financially while they're also doing good. So that's also like another concept. I think it was in 2015 that the Department of Labor ruled that, they had a ruling that employers could add ESG investments to their retirement, their 401k plan choices or their 403 plan, their retirement plan choices. And that again is another way where it becomes more visible, because now maybe there's many people out there who are seeing it as an option in their retirement plan selection. So the idea that there's more and more conversation around it, there's more people coming up who are making very vocal about the importance of doing it. And then for any of us who have children, whether they're young children or they're adult children, we tend to listen to what's important to our kids. And when we hear them talking about saving the environment or making an impact or investing in companies that are aligned, we tend to not latch on to that, but to concur with that and start following that as well. So I just think you can call it a trend, but I think it's a trend that's not going away, and it's going to continue to get deeper and wider each year as we go along. And there's more and more opportunities to do it, whether it's through ETFs or investing companies that directly, or mutual funds or separately managed accounts. There's also private equity. There's so many different ways to invest in it now. It's like just becoming part of the investment landscape. And there's been some talk too, in the past we've looked at investing through like a Morningstar focus, large cap companies, small cap companies, mid cap companies, and value and growth. And probably in 10 years, it's just going to be all about, it's going to be more of a larger focus on just investing in general and how it impacts our surroundings. And we'll see less of the style box investing. That's just my gut.
Juliet, I just wanted to jump in on one thing that Kathleen touched upon about the 2015 DOL statement that they put out there. We've seen opposite with this administration in terms of ESG, and they're actually kind of pushing back on it a little bit. Mm-hmm. And I think it'll be interesting to see, what happens in November, because I think that will influence how ESG moves forward and at the speed that it does. Because as I noted earlier, regulators are, at least during the recent administration, are trying to at least put a little bit of roadblocks in front of these funds.
I'm interested in in sort of the mentality of, as we move into the giving season, how do you think this year will be different? And Ron, the sort of the mentality of giving as Americans, what do you think we'll see change as we go into the end of this year?
Well, I have good news and bad news. The bad news from my perspective is there is a focus domestically. More people are thinking what's going on here and how are we going to solve problems locally. There's less of a focus on international issues. Just because of the way we're living, priorities have shifted. On the other hand, we're having donors come to us now that would have never thought of us before. Younger donors, smaller donors. Most of our funding is continuing to come from large foundations and large government entities, but now we're seeing a trickle, which I'm hopefully will become a flood of people reading about us, learning about us, and giving us $50, $25. Never happened before. And it's happening more and more, and hopefully they'll give us a much more diverse base of donors than we've ever. Not the big ones so much as, but individuals, people in their 20s, 30s, coming out part of their paycheck, giving us $120 a week for the next whatever. That's all new because people are aware of these issues and are more focused on what's challenging the planet and how we're going to solve it.
Ron,
it goes to the question that you raised before, Kathy, which philanthropy isn't just big dollars. It can be a school kid who saves up nickels and dimes and quarters for some effort. It should be a part of our thinking and our growing up process that we think about caring for others all the time.
Agree. I think that it's cumulative. That little bit adds up. And Ron, you mentioned you were on, was it the Lighthouse Foundation board?
Yeah, for many years.
So I was on the St. Joseph School for the Blind board for many years. Yeah.
We share that experience.
Yeah. And so we found that those 25 and 50 donations, we received lots and lots and lots of those, and they added up to a tremendous amount of money too. Mm-hmm. It makes a difference, even though, a little bit at a time makes a difference. As long as it's consistent and there's a lot of people participating.
I think there's more of an awareness now people looking around, we see other people wearing masks. People are less focused on how they make more money and how do they get more as to what could be done on the planet to make the planet a better place. And obviously, we're a part of that.
Absolutely.
Vadim, working as you do, Vadim, for a big, prestigious law firm like Paul Hastings. So your job, as I hear you talking about it, is to help funds and fund managers and Wall Street houses to make sure they have all the compliance they need, that they're structured properly, that they're rated properly, that they're doing the right things. Do you ever get pulled into conversations with the family clients of the firm on their philanthropic activities?
Yeah, and we also get pulled in on questions about internal foundations within the asset management firms, because a lot of them do run that. You know, as my prior job before joining Paul Hastings, I worked at PIMCO, who had a very large foundation, who did a lot of outreach and constantly pulling us in and thinking about what's the best way they can deploy the capital to make sure that it's actually being utilized the way that it is. And it's interesting being on the other side of it. You know, when you're on an asset management side, you're structuring the product. When you're on the foundation side, you're trying to think to yourself, how are we going to measure that impact? How are we going to see that the dollars are actually doing what they're supposed to? And it's interesting to kind of peel back the onion and to see, you know, how the capital is being deployed.
Interesting. Kathy and Ron. Ron, you mentioned that you were inspired to rethink your life as a result of the 9/11 tragedy and the pain you had for those many hours before you knew of your daughter's circumstance. And this COVID experience has caused many of us, and we chatted about it before, to hit the reset button on what's important to us, where we spend our time, how we allocate our resources. But Ron, what I'd ask you is, do you have family involved with what you're doing? Because I know from a philanthropic point of view, in my family, there's a little bit of another motivation there, which is, as Kathy mentioned before, it's to teach my kids and my grandkids that there's other things to do. There's other things that are important in life. It is a responsibility effort. You know, everyone has their responsibilities. We have a family foundation. We have a family charity. We just had a fundraising event. Thank you for your nice note yesterday and your support, Kathy, that always. But my son was the MC. Another son brought in a couple of groups. We had a golf tournament. They were all involved. We raised a good chunk of money to help with the efforts that we're interested in. But there's another motivation. It's about involvement. It's about learning. It's about interacting with people of all different strata, all different ages. So the selfish component there is, it's important for my wife and I that our children are involved, and now even our grandchildren are involved. Tell us about your family and its involvement.
In the early years of creating the foundation, my oldest daughter, who was obviously traumatized by that, spent a lot of time with me getting it off the ground. We traveled to the Middle East together. She's a writer and I'm a journalist. She helped me write position papers. She's obviously a lot more skilled than I am. So I really needed her help, and it was very valuable. And then as things continued forward, we now have 140 in staff. So my family is involved. They know what we're doing, what I'm doing. When I go to the Middle East, I send them pictures and photos, and I'll take them occasionally. But I didn't want my goal, my focus to become theirs. They each have their own goals. They have their own things that they need to do. I want them to be charitable, and they're being charitable, but in different ways than I am. And nor do I think I have the only answer. I just think the general philosophy and attitude of trying to help others in whatever way you can is important to impart. And my kids, I think, have picked that up beautifully.
Vadim and Kathy, I'd ask you the same. What do you see in terms of, Kathy, how are you counseling families? Vadim, how are you seeing families get involved? Do you see much family involvement in the activities, or is it binary?
Vadim, do you want to go first?
Sure. I think, you know, I am seeing families getting involved in this. I think it's important. You know, I agree with Ron that you don't want to make your goal the goal of your kids and others around you. But I also see the value of bringing the family.
But I do. No.
Yeah. Believe me, I tell my daughter whatever I'm doing, she needs to go with me and do it with me, so whether she likes it or not. But I do see the value, because I think there is a way to connect, and sometimes, you know, you struggle to connect with you know, your child or whoever, and if you can find a common goal and it's a good cause, then I think it could bring together, which is terrific. Kathleen?
Yeah, Vadim, I agree with you as well, and Ron. So I see philanthropy or giving or, you know, giving of your time or money or whatever it may be as a great way to bring your family together and to create a common bond. There's a lot of times disconnects between generations, grandparents, grandchildren, or parents with their children. And there's a feeling that you want to help them understand the importance of giving. And also for those who have been fortunate to have wealth, to understand and their role in the stewardship of that wealth, and also in the ability to share what, you know, with others that are less fortunate. So using the premise of, you know, a foundation or the structure of a foundation to bring your family together. So in Ron's case, he has a specific foundation, which is fantastic, but there's also foundations that might, you know, be family foundations that don't have one specific cause, but they might have multiple causes. And it's a great way to involve your family in the decision-making process. I always tell clients, even if they don't have a foundation or a donor advised set up yet, you can, for Thanksgiving, you know, Thanksgiving's coming up. One of my favorite things to do is for a family to let their children know that they'd like them to think about a cause that's important to them and where they would like to donate some time and or money, and come to the table to present formally to the family why they feel that that charity or organization is worth it. And then the family will vote on whether or not they will contribute. So if you had 3 children, maybe they're each getting $100 to donate, or time to donate, or $1,000, whatever is right for your family. But it teaches them at a very young age to really be thoughtful about others less fortunate and a way to give back. And that
That's great, Counsel.
Together.
I really like that, Kathy.
Yeah, it's terrific.
And actually someone was asking the question, how do we teach young people to really think about this? And I think that's a great practical way of doing so. I think we've got time for one more question before we wrap up. And Justin Douglas, who I know is in the UK, you've been very active on chat, so thank you. And you submitted a question, Justin. If you're there, we can unmute you.
Yes, I think I'm unmuted.
You are. Hi.
Excellent. Hello again. Good to be here. Great topic. I'm very keen on this whole area. A lot of my investing, I don't count myself as a ultra wealthy, but a lot of my savings go into the impact investing and trying to move in that direction. And I suppose my question is about, you know, this huge momentum for this is fantastic. But we know that there are huge numbers of people out there that are, you know, I'm going to just say in the question I wrote, downright horrible, you know, wanting more money, whatever it takes, whatever is damaged in its wake. How do we persuade maybe people like that at one end of the spectrum to move in this direction? I mean, certainly I feel it's about showing maybe the joy that can be got from seeing good come out of your investments, but I'm interested in the panel's view on persuading more people to move in this very worthwhile direction.
It's a great question. Thanks.
I think one of the ways you can dissuade people to do that is to show them the joy of doing it. Quite frankly, the last 18 years have been the most fun of my life. And I spent all my time before that building shopping centers and drilling for oil. And it was nice, but this has been a whole new adventure that's been much more meaningful. I get to work with people who live on a higher plane and deal with issues that are much more important than where their next paycheck is coming from. So to me, there's a reward from doing this that far outweighs the effort.
Vadim?
Yeah, I mean, I think when I speak to regulators, it's harder to convince them that the joy of it should be enough in order for them to allow that specific thing to move forward. Which personally, I wish that would be a good argument. But I think from a regulator standpoint, in order for them to acknowledge that ESG investing, impact investing is real and it's here to stay and it should be advocated, I think you have to show them returns. You have to show them that these strategies perform. You have to show them that they're being marketed correctly with that and not being misleading, and that whatever the product says that it does, it's doing exactly how it's supposed to. And I think with that, the regulators will be more comfortable. And then I think you will see a sort of a swell of encouragement behind those products. And then again, what you want them to be is perhaps 5-10 years from now that we're not having this conversation, that ESG and impact is so mainstream, is so embedded in everything that we do, that we don't need to isolate them.
Are there ratings now in your world, Vadim? Are there third-party rating agencies?
They're all over the place. You know, you have S&P, you have MSCI, you have others, and everybody puts forward their own ratings that, you know, does not lead to a lot of uniformity. And some will argue we don't need uniformity. Others will say without uniformity, you don't have a common standard that everybody can look and compare the same things.
One of the things that we've seen happen is our not-for-profits are beginning to form for-profits. In Jordan and Morocco and Tunisia, each of those not-for-profits are moving forward to create for-profit affiliates within the organization, because we have skills and things that we're doing that employers want. When we train for an employer and we do it on a not-for-profit basis, oftentimes that employer comes back to us and says, "You've done a really good job. Can you train our existing employees?" And more we're doing that. We're also getting to the point where we're going to be creating profitable jobs and getting paid back with tuition by getting a piece of the revenue that these people generate after they're working. And so you can marry the two and amplify your effect by doing that.
It's great to see that happen. I think we've just lost Ron, but I think it's great to see that reverse, because it's not often that you hear of for-profits being set up off the back of for-profits. It's normally the other way around. We need to close out, unfortunately, but this has been a fascinating conversation. Jim, would you like to share any thoughts before we finish?
Yeah, I'll just say, first of all, thank you to Ron, thank you, Vadim, thank you, Kathy, as always. Interesting conversations, but it always seems, Juliet, that these are the start of a much longer conversation. So I'd expect this is a topic that you and your editorial team will come back to time and again with Kathy and with other people who can help us broaden the topic. I think the point that Kathy made early on, that it's not just for the wealthy to think about giving, and philanthropy sometimes takes us down a different path. But I think that the combination with the whole ESG movement that Vadim is so knowledgeable about and pioneering, frankly, in terms of bringing transparency and consistency to the consuming public to have a faith that they know what they're getting and that they're getting what they think they're getting is critically important here. But I wonder what the real impact of this COVID reset button will have on the long-term, not only ESG investing, which I think it'll be a turbocharger to, but it's also laying bare the enormous need for the role that philanthropy can play between government and business and the other not-for-profit world that exists. And those three are very complementary. They do very different things. And I think we're a better place because we have all three, business, government, and the not-for-profit and spiritual community. So I wonder what I certainly think ESG will be turbocharged by this because of our rise in sensitivities. And I wonder if our philanthropy can be better focused in the future as a result of hitting the COVID reset button.
I couldn't agree more, and I'm encouraged by these conversations that we're having and the fact that we are kind of experiencing this reset. Kathy, close us out. Final thoughts from you.
Final thoughts, just to same thing. It's very encouraging. You can make an impact whether you have a small amount of money or a lot of money with your time and your money and in your investments. And I think that the fact that we saw small changes in behavior in March, and all of a sudden you can see the Himalayas and the air's cleaner and the water's cleaner, I think has also motivated people to realize that small steps can make big changes.
Thank
Beautiful.
you. Vadim, Bob, Kathy, and Jim, thank you so much for such an insightful and thoughtful discussion into the challenges and future of philanthropy and ESG. And a special thank you to you, Kathy, again, who's a Managing Director and Private Wealth Advisor at Morgan Stanley, for being our partner for this series. Most importantly, thanks to all of you in our community that joined us today and for the great questions. We hope you enjoyed it. Please do share any feedback with us. You can email us at community@worth.com. We'd love to hear your comments and any topics you'd like us to cover in the future. And as Jim mentioned, this will certainly be a topic of conversation that we'll continue to cover editorially. In the meantime, enjoy the rest of your day, stay healthy and safe, and we'll see you soon. Thank you. Thanks, everyone.